Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight the markets were again choppy. As we can see, the Australian dollar took a challenge to the upside and got close towards the highs around 69.50, 60 area, but failed to continue and was rejected. And from there, the market is back pressuring the downside support, seen around 68.60. Not quite broken it, but still the market is weighing on this support or key support level. In the overnight, the US Labor Department showed a record number of jobs openings, indicating recent interest rate rises have yet to slow the labour market. The US job openings increased by 199,000 to 11.239 million last month, well ahead of forecasts. The US job openings have remained elevated and above 10 million since the September of 2021. Meanwhile, the August US non-farm payrolls report will take centre stage this Friday. While last month's data exceeded forecasts, global markets expect a sharp reduction in non-farm payrolls growth. That is, to the figures predicted to around 295,000, with the July number coming in around 528,000. If we do get a weaker number, the markets will once again be volatile. So do keep an eye on the US dollar index, which measures the greenback strength against the basket of 6 major currencies, and was surprisingly flat overnight as it holds around 108.70 after recently posting a fresh 20-year high of 109.42. The euro still maintains its bullish stance since breaking above the midway point, and the MACD also is a little bit more encouraging. I still hold the view, that is, that the markets should push the bull market should push the euro up towards the region of 100.70.75 and reassess from there. Not coming out with any big calls at the moment due to the risk environment that we're holding at the moment, and the market is still relatively whipsawed, as we can see here over the last few days. Taking it from one step at a time, let's see if we can reach that upside objective. That is around 100.70.75 and reassess. The dollar yen still maintaining its upward trek as it looks towards the region of 139.5 as a potential target, and it's now challenging the 138.80 level. I feel that from the bearish divergence seen in the RSI, although the ADX still supports the bull trend, that we could eventually see a rejection from this top side and see a pullback. That is towards the region of 136.80 as a potential target. Moving on to sterling, the market broke down again and now back towards that bottom side of the range, which is seen around 116 figure to 50 area. As we pressure this region, there is still bullish divergence. That makes me a little bit concerned that the market could still rebound quite aggressively, and that is back towards the region of 118. So I don't want to get bearish at the bottom side of the range just in case that we should see a rejection. Along with that, I do notice that the ADX is overheating somewhat as it's risen above 40. So let's see if we can get a rejection, and that is see the bullish divergence kick in. Gold was weaker overnight and failed to continue its upward trek. It closed underneath the level of 1,730 and pressuring the support level of 1,722. There is some divergence here, but only weak now due to the overnight decline, and a break of 1,722 or close under there in New York tomorrow would see further risk towards 1,680 to 1,700 as a potential target. Looking at oil, well, the market got close to its objective, which was around $98 a barrel, just under there, and it's now posted an engulfing candle. So do keep an eye on that, because if we get further weakness and a confirmation, that is a close under $90, will give further indication that the bears are coming back in greater numbers and may actually see a decline back to $86 a barrel. But we do need to support this negative candle, and at the moment there is some sway towards the bearish case due to the overnight price action, but we do need confirmation that is a break of $90 a barrel, and then we will see a further bearish case. Until then, we may actually see this candle negated and see a retest of the highs. Well, that wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.